quick shout out to today's sponsor, Katana. We'll hear more from Katana later in today's episode.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another live stream of 0x Research. Today, I'm losing a lot of money. I assume Danny's losing some money. And I assume James is going to lie and say he hasn't lost any money. But in reality,
I didn't lose money. I made a lot of money. I got short last night, 11 p.m.
No, he shorted exactly before everything went down. Holy shit, my goat. How are we all feeling? Danny, how are you doing? Let's start with you, and then I'll ask James about his thoughts.
I feel fine. I'm gonna say Taiki faders are in disbelief right now. They actually thought he was a mid curve. They thought once again that he was being mid curve, shorting 1 million size on ETH, but he was actually correct the whole time. I'm not short anything. I don't know. My exposure to the market right now is Bitcoin. I'm not too upset about it. So I'm feeling pretty cozy.
Dude, my fucking goat. Look at this guy. He chatted.
Pull him up. Let's see it.
While we all chatted. Fucking over. Fucking over. He chatted, I chatted, and he fucking made it.
The Taiki faders are in absolute fucking disbelief right now. They can't even handle. He's done it, right? He's completed the transition from like second cycle mid curve to third cycle right curve.
Yeah. Yeah, I like Taiki for what it's worth. And also, like, I think the only place where I can think of, like, where he, like, I feel like him losing money was always a meme, no? Like, he was long fart coin while it went, like, 6x or something. Like, he caught it late, but he caught it and rode it. By the way, 6x here being late is also in itself a little ridiculous. But,
yeah.
Before we glaze Taiki too much, I want to give a huge shout out to James Christoph for joining the stream today. James, how are you doing?
Thank you, Boccaccio. I'm doing pretty well, actually. I'm positioned pretty similarly to Danny, actually. I'm really not doing anything besides holding Bitcoin and farming some stuff. So days like this are more just entertainment for me, but hope everyone's doing okay.
I hope so too. The issue with being a bear or like not being upset when the market goes down tremendously is that people think you're the worst fucking human in the world. Just because you're like, oh, like, you know, like, because I mean, you're very actively like, if you see it, he did an evil laugh and had to mute himself. But like, if the market goes down to like 35, if hype goes down to like 35, James is like, oh yeah, I'm gonna buy some here. Versus like, I'm like, James, I'm gonna fucking kill you. Hype went down 40%.
Yeah, I think the key is like never put yourself in the position where it's extremely painful to see the price going down. That's a very good heuristic.
Yeah, I think that's a good point. Another thing here is like we also just dumped like 23 days ago. We had that was horrible, and I think everybody saw a bunch of liquidations, said, "Oh, this is fucking free money now." Like, well, it was worse than the COVID crash.
This is actually some of the stuff that would happen, like if you remember when like those real quick programmatic liquidations back in 2021, and then you'd pretty much get that reflexive retracement, like when the books filled back up, like 60%, and then we would just trend and bleed right back downwards. Like to me, it looks almost identical to that. Like I'm not. I mean, I didn't actually get shorts. I didn't make money in this. I'm not trying to say that I saw it coming, but like it is not that crazy to see this price action, I think.
Yeah, I think I would agree with that. Like maybe just like a general expectation here is, and I think you saw some of it the day of 10/10, but obviously that's way too early to take the position. But to see like those prices get maybe touched again for Bitcoin and alts, even like not necessarily like the bottom of those candles that we saw, like on, Atom going to 0.001 on Binance, not quite those prices, but sort of like the normalized kind of low prices that we saw on things. Like, I don't know, I just think the market sees that it runs up really quick, pretty reflexively, and like James said, it's like if you got long on basically like a free money entry,
you're out.
You're going to close that out and like cap your risk on it, and it's unsurprising that we would in a short term kind of like see some of those prices again.
Yeah, except for me, who did not. Like, I longed the 10/10. I was like, yeah, this is fucking free money, and I didn't sell.
And I don't
Very
think it's a
smart.
really different story than like it's still probably like a I don't know what percentage you'd want to attribute it to, but I think it's still like a DAT to dominated narrative and DAT dominated flows. So like, we were talking in chat with Dan Smith, like it's not that crazy to see this price action after the kind of horrific MNAV behavior and then lack of ATM issuance.
Yeah, I think I faded DATs very early on. Like I never bought a DAT, and then I was always like not very interested in them. I still don't get why I think Daniel Smith is interested in them from like the same reason some people are really into Legos or trains, if that makes sense.
Mhm.
I think he's just like I'm really interested in DATs.
That's a
Because
feature, not a bug of Daniel
Yeah,
Smith.
it's a feature. Yeah, that's a feature of Daniel Smith, right? Like that's my goal. But it's also like I don't find them interesting at all. I felt like they fulfilled their purpose like one time with Ethereum, and really only two of them did it that well, right? It was Bitminer and what's the other one? The one that Lubin's in Sharplink.
This bet, and then this
Yeah.
one, BMR, and then ETHZilla,
Yeah.
which is the one that just sold some ETH
Still is.
last week.
Yeah. Like,
Yeah, ETHZilla, I don't know about. I don't know about
like
that one.
you really only had to know about 3 of them for like maybe 2.5 weeks, and then that was all of that knowledge that you needed. Versus, I feel like ETFs are a lot. No, still.
Yeah, no, I mean it's a totally different market than the ETFs, right? I wouldn't even. That's not even remotely the same thing. Yeah, one's a real
I will-
buyer, one's not.
Well, but if you're saying flows are what matters, then it's like I would say that flows don't matter at all. Except
No,
when
I think they.
Zilla sells, that's when you get to get angry.
Well, no,
I think
I
they
mean, I
definitely
think they
matter.
matter. Like, I think they were what put us over the top, right? Of like past that trending level where we were kind of stalling out for a while. I think it's. I mean, I don't know how you could argue that that Tom Lee wasn't responsible for ETH's push to all-time highs, right? Like that seems trivially obvious to ascribe that to him.
Yeah, he did a really good job as well.
Yeah, I feel like I don't know. My views on DATs early were pretty similar, Bach, but coming with the lens of like, okay, I mean, these are like you can gamble on them if you want, and you just have to decide to stop gambling when the the market is like kind of aware enough of what's happening. So I don't know. I think I had some short-term interest to just like trade some of those announcements and maybe get some quick upside, but absolutely zero interest to ever like hold any of those, because I think we all knew, and we've been talking about them for months now. It's so old, it's so well understood. I think at this point, if you don't know what's happening, then you're not like looking hard enough. But pretty obvious that like those were never designed to be positive outcomes for like retail buyers.
Danny,
Yes.
What is a positive outcome for retail buyers? Like DATs are not, ETFs are. Wait, did you guys read the
Yeah.
what's his last name? Is it Visser? It's like the Bitcoin's IPO piece. I thought it was Cope, but like it was also interesting Cope. Did you guys take a look at it?
I read Giver blacklined it and said it wasn't professional, which was humorous this morning as I woke up, but I didn't get around to actually looking at it.
I
Was
just
it
saw the
good, or
comments that it was like
what was
AI
like
swap.
what was the topic? Yeah, I don't really follow his stuff, to be honest.
It's like the main argument is Bitcoin never had an IPO, and it's going through its like pseudo IPO now. Basically, all of the old like holders of Bitcoin, cypherpunk people, like long-term crypto and Bitcoin believers from whatever, like the people, like the people we would refer to as like the ancient Chinese whales and whatnot, are now selling Bitcoin quite heavily, while these institutional buyers are stepping in, be it mainly for ETFs.
So that's a question I've
so
always
his-
had. Like, it's a very common thing when people say like it's Chinese whales selling. Do people that say that actually have insight onto the flows of like who's selling, or is it just one of those things that sounds really good? Like it
I
makes
swear
sense, but I just don't know how
It's-
actually true
well,
it is.
I do think that it logically, like there is clearly a lot of sell pressure coming in, and while there's like positive ETF flows, so in my mind, it makes sense that it's these long-term holders of Bitcoin who maybe think that the Bitcoin and crypto narrative is now being co-opted by bankers and institutional funds, TradFi, whatever we like to say. I haven't seen the flows. I would need to check. But we did have that like period where we saw a lot of these wallets wake up and sell. Do you remember? And then like everybody stopped talking about them. We exclusively talked about it for 3 weeks, and then nobody else ever mentioned them again. So maybe it's just a continuation of that, which to me makes sense.
Yeah, I've seen some charts and data thrown around. I haven't looked that close to really understand if there's like anything meaningful happening here, or if you just have like it's not interesting, I guess, or it wouldn't seem that meaningful if, you know, folks that have billions of dollars in Bitcoin would sell a little bit every time it, you know, takes another big leg up. So I don't know if there's anything meaningful, because I think you could observe probably the same trend in 2017 and 2021 and now today. So it's hard to say whether like how much that means anything, or if it's just, oh, you know, Bitcoin's up another multi-X in a few years, time to cash some out into other things.
Yeah, and I think like also just like the slop thought leader pieces are just a little less interesting at this point. Like it doesn't tell you anything. It's just, I don't know. I don't think it's really worth anyone's time, to be honest. It doesn't tell you any new information.
Yeah, I would agree. I think I don't know. I didn't read this guy's article. Maybe I will, just so I'm more informed afterwards. But this is really fucking long, and he definitely ran some thoughts through the LLMs. I guess the big takeaway I would have is like the ETF flows for BTC have been really strong. I don't think that it's as quite as like broadly accepted of an asset as people think or would like it to be quite yet. But I don't know. I think adoption meaningfully is like much greater than it's ever been. Like, I don't know, consistently these things are being brought up on national television and, you know, to boomers as like other options in their 401ks that they can, you know, buy the Bitcoin IBIT ETF and allocate to. I still think you probably have maybe like a more crypto aware class who is deciding like, hey, I'm going to allocate some of my retirement funds to this thing. But the trend is still positive, in my opinion, just where kind of like broad acceptance or like this notion that you might put a couple percent into Bitcoin has become, I think, much more common.
Yeah, I think a lot of people also were very upset. Sorry, Boccaccio, just real quick, just upset that there's not a lot of asymmetry left in the asset class on the top assets, right? Like it's just not there, and it's never going to be there again. I think it's better if people like come to terms with that and they'll stop leverage trading on 300x on Aster. But like BTC is not going to pull another 300% in 4 months, right? Absent something, you know, horrific happening or very good happening. But yeah.
I'm curious how, like, the issue with what we just mentioned, Danny, is, well, yes, first of all, completely agree with you. Unless we have like a very significant pullback, which I don't know what it could come from. I want to say exchange blow up, but I think that's just because the last time it happened, it was an exchange blow up. So I actually don't know
I can
what
give
it
you
would even.
I can give you an extremely probable one you can almost like
Quantum.
guarantee. No, just the S&P going down 10%.
Yeah,
Okay.
like people
if the
don't
market goes
like
down.
yeah, like so if I'm pulling up a chart now, like we have literally gone, I mean, from the April bottom, the S&P like in a legitimate straight freaking line is up 38%.
Yeah. Okay, so that's a good one. I'm like kind of wondering what percent of these like ETF flows actually people who, because there's definitely a class of people out there, right, who have had Bitcoin exposure since the 2021, 2022, but who want to use the ETFs as maybe a more tax efficient way to get exposure to Bitcoin. And like, I wonder what percent of flow is people who already held Bitcoin off chain, no, on chain, and are now like Felix is pretty vocal about or like explicit about this is that he only holds
Yeah,
BTC.
I agree.
Yes.
I personally, any BTC that I sell and rebuy is only in IBIT. It's just it's
So like,
safer, it's more efficient.
yeah, I wonder how like what percent of people is like James and Felix and stuff who are like getting exposure for these ETF products as opposed to the ideal scenario, which is the entire world has to buy 1% each. Everybody has to put like 1% of their portfolio into Bitcoin, right? Does that make sense? Like, I wonder if the flows just aren't there yet, and they probably won't be there for another some time.
Yeah, well, I'll say that I buy IBIT. I think it's probably my preferred vehicle over buying actual on-chain BTC now for some of the reasons you mentioned. I mean, I have, retirement accounts that are tax advantage, so I can buy it in there, and I can't buy, regular on-chain BTC in there. But yeah, I would agree. It's in that general trend. It could still be early if there's an expectation that something like BTC or like a crypto allocation becomes like a standard kind of like allocation portion of a portfolio. I don't think you have any like meaningful portion of like the world's money that's like saying that they're deciding to allocate 5-10% of their portfolio to Bitcoin and like consistently allocating it in month over month, like we see with just buying the SPY or buying the Qs, for example. But that's significant upside if you think that that's coming. So
yeah,
it just might not be a 7x in 2 years.
Yeah, James would be really upset if crypto went up.
Terrible.
Just don't forget that. All right, should we do tokenized funds? This is actually the main pitch that we gave to James.
Yeah, let's talk about it. Maybe just to lead it in. Last week we had Kyle on to talk about what they're doing with tokenizing funds and private credit and some different things on chain. James, you're in the TradFi space. Talking with Kyle, I think it was pretty interesting. They're sort of exploring like a relatively kind of underexplored market, at least on the sort of tokenizing funds piece of things. Curious what thoughts you had there, like what value, maybe just basically what bringing funds on chain does in the first place.
Yeah, it was like I've always kind of not been super excited about on-chain equities, just because I think like the existing process is actually pretty good for trading equities off-chain. Now funds, on the other hand, I think the existing process is really, really antiquated and like super actual, very heavy on paper and documentation and tons of other middlemen. Like if you think of the simple process for like you, Danny, to subscribe to a hedge fund, you need to fill out paper subscription docs, send it to an administrator who sends it to the fund, and then you get a contract note back from the administrator. It's this very, very antiquated process, and you get a mark mailed to you once a month from the administrator. You have no real oversight on a day-to-day basis as to what's going on. So there's a couple different things. First, just from a pure operational perspective of subscribing to funds and keeping track of your assets, it's super, super beneficial. I think just a one-click subscribe, one-click redeem, and your USDC goes back to your wallet address, I think is like a huge unlock. And then two, this one's a little, I think, further out there, but to the extent that you have tokenized funds and to the extent that you actually have funds that are trading on chain, you get a huge ability to actually like open up the books of what the fund is actually trading. And that does a couple of things. One, it's a huge unlock for you as an LP, so you actually know what your manager's doing, as opposed to the kind of opacity that we see in a lot of vaults now. In DeFi, it's like, we're delta neutral, but what are you actually doing? We've got no idea. And then two, it makes for a really, 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 really robust borrow lend market for funds, right? So imagine you have Danny's invested in Boccaccio's fund, you tokenize those equity interests, and then you put that into like an Aave type pool and you borrow 30-40% against it. Like I think that's a huge business in TradFi, and it would be a massive, massive unlock here. So I actually am genuinely excited about it. I think it's very cool. And I've been talking to some people to try to get some exposure to it.
But one thing I don't, and James, you would understand this better than me. I don't understand how the regulation behind all, like, because one of the things with Kaya was, we might make it like permissionless and like without KYC. And to me, that seems like it wouldn't work because you don't really, like, what if something goes wrong?
That I'm less clear on, because like you 100% have to KYC your investors and funds, right? Even if you're a Cayman fund with very limited oversight by regulators, you still need to do that. I
Yes,
don't know how that works.
the specific product that they mentioned they might be rolling out in the next 6 to 12 months was taking, let's say they have a bunch of tokenized funds on chain now from various providers, taking like a bunch of those and rolling them into like a basket and wrapping that under, a particular token or like a vehicle that you can then invest in.
Got
And
it.
like
Yeah, maybe.
that product specifically that he said, could potentially be retailed no
Yeah.
KYC.
So maybe what they're doing is a similar thing as to like what people are doing for like private company equity, where you're just wrapping a feeder in between it. So basically, you as the end manager, you're the investor that faces like OpenAI or something, and then you resell that exposure through another vehicle. That might be what they're doing, which is fine. But like, I'm most interested in actually being a direct investor in the fund and being able to like tokenize that.
I guess I'm curious, like, so you mentioned the advantage here of, more insight into maybe what's happening with the fund, also simplicity of just like interacting with it, putting dollars in, maybe less paperwork. It, is some of that like Reg Arb, you think, or do you think just the fact of being required to put them on blockchains in which you can like see some of these things, whether it's, via the smart contract or just like you can actively see the balance of what the fund holds and what it's trading, kind of like results in that? Like there's still be upfront like effort you'd have to do KYC and all these other things, but then once you're in the system, you get way more visual clarity.
Yeah, I think it's the latter. I don't think it's a Reg Arb question. So where I think you see Reg Arb now are like these what I'll call stable dollars, like not even Athena. There's like way crazier stuff on chain now, but you're basically just giving a couple $100 million to a team and they're trading delta neutral, and they give you a a stable coin as a reference of your equity. Like that's Reg Arb right there. What I would love to see is like I actually can subscribe to Boccaccio's fully formed hedge fund in the real world, but he just puts it on chain and allows me to, reference my ownership on chain, subscribe on chain, redeem on chain, and then borrow on chain. I think that's the huge unlock.
And this also means a lot of, I guess, like things are going to move on chain as well, like assets.
Yeah, I think I genuinely do think like this. Like I cannot explain how painful the process is for like interacting with funds and subscriptions and transferring stuff in the real world. Like this is genuinely something that I think is improved by a millionfold by putting it on chain.
Wow, this is actually really surprising to me how positive you're being. We're very happy with this. This is the first time I've heard James not be cynical about a blockchain product.
Oh, there's people.
James bullish.
Yeah, I met a couple people at DAS too that are, I won't name the exact names, but yeah, like there's people doing very interesting stuff on this and tokenizing pretty cool traditional instruments, and putting them on chain, which is very cool.
Well, what do you think about, maybe this is slightly tangentially related, but Canton Network has been getting some press, and maybe I just flagged out?
I actually think Canton's pretty cool. I'll be totally honest, I don't quite know the connection between the token and what the actual product is. I'll be totally honest. But like from what I've read, like what they're doing with syndicated bank loans, and like data reporting and basically aggregating all of those flows is pretty interesting to me. Like in terms of it's all like the operational nitty-gritty stuff that's really painful on the back end for bank loans and other types of traditional bank issued credit. So from what I've seen there, I think it's pretty cool. I've got no opinion on like what the price is. I don't even know what the current valuation is, but I would not be surprised to see banks actually adopt it.
I don't really know what Canton does.
Fair. Yeah, I think it's in a similar bucket for me as well. I think seeing people talk about it's getting brought up in the chat, saying that the node operators are making a ton of money, but I couldn't really tell
I
you
know
otherwise.
they hit a 42x on Tether equity. That's I don't know.
Oh yeah, that's right. That's right. Because they invested when was that, a few years ago? 2023 maybe?
Yeah. That's a good deal.
I wouldn't mind some Tether equity, but
actually I asked this question to Ryan. It was floating around on Twitter. But so there's 3 companies. Tether, OpenAI, SpaceX. Each at 500 bill private valuation. Which one would you build?
Definitely not Tether. I don't know between the other two, but not Tether.
That's a tough one, honestly.
Why not Tether? Then if you're gonna combine.
I mean, I have a hard time investing in anything at that valuation that's not like a technology company or at least something that's building something new. Tether's great, I love it, but like elephant in the room, a lot of it is tied to connections that company has made with the current administration, right? So I don't know. That's not something I would want to bet on long term.
I guess,
Fair.
yeah, and maybe to James' point, and maybe how I would go about it, and I would agree. I don't know if I'd have a clear answer between like OpenAI or SpaceX, but just thinking about potential growth prospects, like I don't know, I think I could make up a magical number about a space company being worth trillions and trillions of dollars for whatever reason, mining resources in the galaxy or something like that. And AI, I think we're sort of like yet to see what the true like kind of future technological value of that is. But I don't know, we can look at finance businesses and it's like even if Tether was worth all of the top banks and finance companies in the world, like your upside is like kind of capped by reality versus businesses that are sort of like kind of magical and could be worth anything almost.
I got to jump to my real job, guys, but I appreciate having me on today. Talk to you guys soon.
Thanks so much, James. Always love to have you on.
Just remove that.
He took me out. Did you have a counter to that though? Did you have a thought on the Tether SpaceX
No, I
OpenAI
agree
thing?
with you. I think the issue here is like I can very clearly see how Tether makes money. And how Paolo just got really upset. I can clearly see how Tether makes money, and therefore I can clearly see how you can value Tether. And then there's like growth, like the entire world is on USDT rails. You know, it's difficult, but like with ChatGPT, with OpenAI and SpaceX, first of all, I don't think SpaceX even knows how it can make money. Like, and I think OpenAI has like 3 to 4 ideas, and I think you can clearly see that currently they're leaning towards like advertising, or at least that's like the general rumor that because they're doing like all these personalized chats, they're going to be able to like recommend more personalized advertisements to you. So you can see that that's how they want to make money, but also you don't know if that's what they're going to pick. Like you don't know how OpenAI's commercialization is going to go at all. So it's much easier to say to SpaceX, which is like you don't know how the fuck they're gonna make money. They have a billion options just because nobody knows. Easily assign, like say, yeah, 500 billion is fine. Even though technically, like Tether has probably a more clear plan on how to commercialize the product because it's very obvious. But like, there's also risk attached. Is yield goes down, like interest rates go down. How does it make money? A lot of stablecoin products are now returning interest rate. Like they're returning the yield, right? So how's it gonna make money if it has to compete with the others, et cetera, et cetera? Fragmentation across stablecoins. A lot of these banks, I presume, are going to try and issue their own stablecoin products. How does it compete in that scenario versus SpaceX? I can't name a single SpaceX competitor. I can't name a single SpaceX competitor. I guess like NASA.
I think they work together. NASA contracts SpaceX to use their rockets.
So they have like I'm sure they have.
There's a government relationship there.
Hawk's a fucking idiot. He doesn't know anything about space. I'm like, yeah, I don't. But also like OpenAI, it has competitors, but has 2 competitors, like Grok and Claude, Anthropic and X. Is there any other that's serious?
You don't think Google Gemini?
Do you use Gemini?
I've used it. I've used their video model. It was pretty good.
Yeah. They're like Nano Banana was also pretty good. But like day to day, you're like, I have a question. What do you ask?
ChatGPT. But I think here's the thing is like,
but like also and could be.
The thing that I was gonna say is like the upside is that there's so many other products operated by Google that like I'm gonna use their product. So if they integrate their LLM into the product experience, like I don't have to go and ask ChatGPT, like they'll, seamlessly integrate it in a way that I'm using their model is kind of my thought process there. But either way, I guess what I would say maybe about this whole topic is like, I think there's a real risk that none of these companies go public in the next long period of time, such that it becomes kind of like a, which would you have rather invested in, and then you never even got your public exit opportunity. Although we are seeing rumors that OpenAI may be targeting, going public 2027 at like a $1 trillion valuation. So maybe you get a free 2x at 500 billion.
I was watching this. There's this podcast called Cheeky Pints. Do you know it? It's with the Stripe.
Yeah.
Stripe. Did an episode of Dan Sundime. I don't know. He's American. He's at D1, and his thing was, and he's like, I think he's a public markets investor, like a large portion. And his thing was like, if I was a company, I just wouldn't go public. It makes no sense. You have to deal with annoying people. It's a lot of work. Stripe has obviously not gone public, so I can imagine not a lot of them will go public. I think that's fine, because we are going to bring equity perps, which lets you longer play with equity.
I don't know if that's the reason that it's fine.
Because public markets are so weird. Like, I obviously am not a traditional financial investor. If you've listened to this pod for more than 3 episodes, I think you would know this, but I have a lot of thoughts about this. And the primary one is that retail is more and more involved in public markets, but also the good companies aren't going public anymore. So it's like a really weird case where, and I talked about this before as well, where we're like, oh, like crypto is just, it's going to get more institutional, it's going to get more like less volatile. And then it's like, well, TradFi stocks are just getting fucking sillier and sillier. Like the markets, I don't know. To me, it seems like that don't make sense. I don't have a massive like decades of experience under my belt or anything, but I don't know. Not a very easy topic to talk about for us, but
yeah, I guess. I mean, I don't have a ton of data to back this up, but I think people would love to invest in some of these companies that are private. Like just anecdotally, I think that's pretty clear. You have probably plenty of people that would be interested. I mean, you see the valuations that these AI companies are raising in privates, right? Like OpenAI and SpaceX and Anthropic doing insane valuations and raising billions. There's clearly like retail demand. Like maybe an interesting result of like fewer of these like most well-known, most like maybe well-loved even like company names staying private is that like if the retail investor is kind of locked out of those, then they'll go and there's like fewer names for them to go and like be excited about, and so then they end up all just like piling into kind of the few that are left. And maybe that's why you end up with stuff like Tesla and what's the other one, Palantir, just like trading to just whatever valuation, because there's so much, I don't know, so much of this like excited capital, and there's only a few places where they can outlet that. But hard to say. Before we jump to anything else, unless you had one more thing to say.
No.
I want to give a quick shout out to our sponsor for today's stream, Katana. This episode sponsored by Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL, believing that change should be graded on how efficiently assets are put to work in DeFi rather than just total value locked. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added VaultBridge yield, and other chain revenue. Follow the link in today's show notes to get started. Thank you so much, Katana.
No, that's the one I know. There we go. It's tough to talk about things very intensely while the market goes down 10-15% because all I can think about is the market. Like,
well, let's talk about the market. What are your thoughts here? Are there
I just shared my thoughts with a friend of mine named Riley. I don't know if anyone else knows Riley, my friend.
Here's maybe the question I would pose is like, I mean, I think this is something that's been talked about, and we see this sentiment all over the funds stream.
You didn't let
James
me
Chris,
finish. It just sounded like I said my friend Riley, and that's it. Well, and I told him I think we're
Oh,
going to
okay.
go up because of rate cuts and because of the ETFs. Like, I'm a strong believer that BTC is just going to keep going up, and then I'm only in 2 other coins, which is like meaningfully hype and pump. So I think they're also going to continue going up. But this isn't. But I'd said this to him. He said this is a horrible thesis. We should probably sell. So I don't know. And he's a really good at, like, he's historically been pretty correct. So
Are you? I know you mentioned to me that you bought stocks for the first time ever, like
yeah,
a couple of weeks ago. I guess maybe what I want to ask is like, are you fully allocated to the market? Like, if you just been in and riding since like this whole year, or where are you
yeah.
at? Like, have you changed
I'm.
positioning or anything?
I was overall. I think I was like 70% long before October 10, and then market went down quite as significantly, and I was like, fuck it. Like, I think we'll go
Bought
up
more.
more, and then allocated more, which I know. But I took some off last week, just because I was like, this doesn't feel great in terms of
Sure.
allocations. Not anything significant, but I did take off some risk just because. Not a very, like, I didn't think it through for too long. I was just like, I should probably, like, I don't think it makes a lot of. I wrote about this few weeks ago for the newsletter, and like, it's been tremendous for my, because like historically I've always been very, very risk on, unless I'm like, we're gonna like I've been like black or white, right? Does that make sense? Like, I'm either like
Yeah.
fully in, or I'm like, yeah, fucking I don't know, I don't care. And the issue with that is that you're always kind of like on edge, because you're like, oh, like, what if the market bumps? If the market goes up 10% while you're fully out, you have to chase. And then if the market goes down 10% while you're fully exposed, you're kind of struggling. So I wrote about this in the newsletter as well, but it makes sense to like keep some money always in cash, just because there's always like these opportunities that pop up. Like XPL was a big one. The pre-deposit vaults, pump, another big one, like doing the on-chain sale. Mega ETH, let's see how it works out now, because I think it went down a bit, but still, like, these types of opportunities. And if you have cash, you don't have to think about, like, I feel like you want to reduce the amount of decisions that you have to make, where it's like, okay, I'm like, let's say in my case, BTC hype pump, but I want to buy Mega ETH, so I have to decide which one am I selling, BTC hype or pump, in what proportions. And then you have to make another decision of like, okay, how much am I putting into Mega ETH, versus like, if you can only reduce that to one decision, which is how much am I putting into Mega ETH, I feel like it's a lot easier. Does that make sense? I feel like this is kind of a stupid reasoning, but when I wrote this piece for the newsletter, to me it made a lot of sense. Like, objectively, you want cash at all times anyway.
I think what you're saying makes sense about not being like spread thin across like a trillion assets, because I think there are
I did
people that
so
that do this
long.
constantly. Yeah, I mean, I did this. It's I think it was another one of these like artifacts from the 2021 market where it was like literally spray and pray, and like, you know, you'd see a different coin every single day go up 10x, and so you just wanted to like kind of be in a
Yeah.
bunch of different opportunities in case one of them hit, so you could sell into it, or ride it back up and down, like maybe a lot of us did. But I agree with you, and I think more so now, like the market is really favoring just. There's a lot of dispersion. I mean, everybody harps on this point now, but it's like there are kind of like fewer and fewer winners, and like most of the things that come out, don't they don't have buyers, or they don't have users, or they don't have any meaningful traction. But the tokens are still like anchored to old expectations around valuation, and so then you're set up with like, you know, these long periods of disappointment, I guess what I would say from a price perspective. A lot of assets and not, you know, not quite so many good assets is maybe the way to frame it. So
Yeah.
Like I think the style that you're presenting kind of like fits with how the market looks, in that very few things are doing well on any like mid to longer term basis.
Yeah. And yeah, definitely. And also, like, you don't have to sell to cover stuff. Like Kobe talks about this. My favorite Up Only episode, which is like the Kobe one. He talks about how he always kind of had a job, or he always like had some cash, so he never had, like, a lot of people from his era, when, let's say 2017, had to sell to cover stuff, right? Like, you have to sell to cover rent, you have to sell to fix your car, you have some bad accident happening, you have to sell to cover that. Whereas if you have cash on the side, you don't ever have to sell, and you're never put in a tough position. So I feel like cash is good. I don't have enough.
Yeah, I mean, I think that's just like a broader lesson about markets. Like I don't know. I feel like if you're one of those people who stops working to like trade full time or something, and you haven't, maybe necessarily quite made it, whatever that means in your position, you can afford your expenses for the next like 2 years out or something along those lines, then you're taking on a ton of risk from like a life standpoint of like, maybe you need to just be levered up in every perspective in terms of, you've got risk on, and if you like, get zeroed out, then you can't pay a rent. That's a terrible position to put yourself in. So I definitely agree with you there. Like, I don't know, this is something that
it's also such basic knowledge, right? It's like, oh, like,
yeah,
you cash on the side, like, yeah, obviously.
this is actually one of the things that Santi talks about over on Empire that I think is one of the like really, really, really positive things that he talks about is when let's say you have some upside surprises in your portfolio, like take those opportunities to, if it's pay down your, pay off your car or pay off your home, or, put more cash away, or invest in something that gives you fixed income that covers your expenses, things along those lines, right? Like basically setting that stopgap. There's a movie, I forget the name of that movie, with Marky Mark in it, about sort of like the gambler, and the basically the feedback is like, yeah, you got 2 million in the bank. That's your fuck you. Anybody's, employer says he wants you to do this, fuck you. Market goes down, fuck you. You get asked to do something, fuck you. Like that's your throne that you can sit upon, and you're chilling.
Yeah. Now we just have to put 2 million in the bank and also have liquid investments, which is super easy. So Danny said it, guys. Marky Mark is also like, why didn't you say Mark Wahlberg?
I don't know. That's the name that I always think of that first, like before his full name comes to mind. So I'm gonna have to go find that movie.
Yeah. Before
go ahead.
we don't have that much, but I guess we should talk about this balancer exploit. What did you take a look at it?
No, only a little bit, but saw that like over 9 figs was drained from, I think it was V2, the V2 contracts on like multiple chains.
Yeah. I mean, the Barrett chain, I don't know how much context you have or like all of the listeners have, but Barrett chain essentially has enshrined applications that work with proof of liquidity. One of these enshrined applications is the Barrett chain DEX, which is called the BEX. And I think that one's based on Balancer V2. So they're like, their entire DEX that makes their proof of liquidity work was, I think, exploited, and then, or like potentially could have been exploited. And they had to like make a Discord announcement, reach out to validators to halt the chain. So all of the validators had turned their nodes off so that the chain would stop processing blocks such that somebody couldn't exploit it and bridge off. It's very intense, but like, yeah, I think over 9 figs. Balancer is kind of like, there's like kind of two sides. So I don't mean this with like any disrespect to Balancer, but like in my mind, Balancer is not a very like primary DEX anymore, right? Well, first of all, like most interactions like buying and selling tokens is now through aggregators or through bots or through terminals or whatever. Like it's just completely abstracted away. Like I can't remember the last time I used the Uniswap front end or the Balancer front end, or like any DEX front end. I would say I think the last one I used was Hyperswap, which I probably didn't even have to. I could have just used an aggregator, but I didn't for some reason. Anyway, but like Balancer still does not do a lot of volume compared to the other exchanges, but it's also quite scary because it's a very old standing protocol. And anytime one of these, like, I guess OG like if Curve got, like, I don't use Curve. Do you use Curve? No. The front end,
No.
especially. Maybe some of your swaps get routed through it sometimes, especially if you're doing stablecoin. But like if Curve got exploited, I would be nervous because it's such an old protocol that you just kind of assume like, oh, it's been battle tested. It's existed for so long. Surely they can't hack it. And then they end up hacking it. I saw some takes like Lefteris, who is like an old Ethereum guy. He has this app called Rotkey, which is for taxes. Anyway, like he's just kind of a vocal voice in Ethereum. He was talking about this and like how institutions will now be more nervous about DeFi. Don't know if that makes a lot of sense because I don't know how many institutions were LPing on Balancer, or like they're using beefy like yield aggregator stuff. But also it's still quite scary. First of all, like Balances was a unique and good product back in the day. Maybe not as popular now, but like if Aave V2 got exploited, I would be fucking nervous. Like if Uniswap V2 got, or if Uniswap V2 got exploited, maybe like crypto would put in like a 40% candle. But what do you think?
Do you think it would matter if an old Aave instance got exploited? I mean, like maybe it matters, but I almost feel like this. I have not thought about this that hard, but almost similar to like OSs for like computers, for example. Like Windows stopped supporting like, I think they stopped supporting Windows 10 this year. You're like official support for Windows 10 bug fixes and whatnot. So you should be like upgrading to Windows 11, I guess, per their rec. I almost feel like some of these like old protocols, we might need to be thinking about them in that way. Like almost all of the capital, the TVL is on Aave v3, right? Like 36 billion or something is on Aave v3. And then there's maybe like, a couple 100 million that's just like in V1 and V2. Might not, like that might be largely wallets that just like have not logged in since 2021. Like a good chunk of that might just be wallets that haven't been touched since then. So while I admit that there's like some risk there, unfortunately, like I don't know, I think we need to probably think about some of these things more in terms of like, okay, that's old. It hasn't been upgraded to like the latest standards. There's maybe risk vectors that like kind of we've solved for since that time. We probably need to be like migrating away from those things. If there's just like old capital sitting in there that's like going to get is prone to like that risk vector, then like I mean that's kind of the risk you take on by participating in DeFi and like choosing to deposit your money into some of these contracts.
Yeah,
unfortunately.
Yeah, it is kind of, I guess, interesting because if like Vista, like Windows Vista had a massive security issue, I wouldn't be like, oh, Windows is fucking cooked. Like they fucked it up. But I guess in crypto, it's like the older something is, you're like the more trustworthy it is. Especially if it's like an older OG protocol that's not like a random fork. You're like, wow, like these guys are like this code should have stood the test of time. Right? If it hasn't been exploited so far, it probably shouldn't have to be exploited.
Yeah, I think maybe the downside of that is that if it's something that's basically old and largely unsupported, then it kind of loses the like value of the protocol or maybe the broader chain or community from like wanting to backstop it if something were to go wrong. So like in this case, like to take down Aave v3 would be to like annihilate Ethereum BFI. Take down Aave v1 would be like a drop in the bucket. It'd be like oh man, you should have pulled your money out of there sooner because it's old.
I don't know. This stuff is really difficult to think about because,
It's tough though.
like, I don't envy actual crypto engineers and smart contract developers and stuff because it's so much money in these contracts that people are constantly like. There's entire countries' economies who run on exploiting these, and not just North Korea. Like, there's multiples of them. And your like entire goal is to essentially prevent that from happening. I don't envy them at all, but
yeah, and I guess this industry, like, we're not quite at the point yet either where, you know, I think like tiny bits and pieces have been played around with like insurance of deposits and different things like that, and kind of having some kind of like backstopping mechanism to these sorts of things, and like, you know, notifications and triggers when like odd withdrawals from pools or something along those lines happens. But, you know, we're not at the level where, like, you know, when you use a bank in the US, you know, an X amount of money for you is basically backstopped by the government. DeFi itself and like crypto is like a ways away from having that sort of opportunity. But even like, you know, insurance for customer deposits, like just from an outside provider, is probably something that like still maybe needs to be explored a bit deeper.
do you remember Y2K finance?
Yeah,
Do you know it?
just generically.
So Y2K was the thing is, I don't know the TradFi term for this. I'm going to say it was like risk insurance, in that if a stable, like, you could bet. You and I are on different sides of the market. You bet that USDC is fine. I bet that USDC is not fine. And they'll give you the specific market. So they will say USD is fine if it stays above 0.995 over the next month. USDC is not fine if it goes below 0.995 over the next month. And if it, like, it's based on Oracle prices, and if that Oracle price hits for like a sustained amount of time, I think it's like 15 minutes or something, whatever it is, I can't remember. Then I get paid out, and like whatever money you deposit, I earn, and vice versa. So it's like, it's actually kind of a cool way of hedging risk. But the thing is that it's very difficult to find people who would take the opposite of some of these things. Like, the things that you would want to make money on, like, I would always vote probably fine for some things, but you also don't want to take on that much risk because it doesn't make any sense. It's like, it's never going to pay enough APY for you to, like, imagine having to pay out a USDC debag. Pain in the ass. Versus, like, I feel like you always would want to take on like some form of insurance. I don't know how they would match that, but it would be very interesting to develop something like that. I think a lot of the times we say like prediction markets are a great way to hedge. Really don't see it. Like, they're very illiquid in their current form. The markets are very fragmented. It would have to be like a completely new style of like market that is being developed, and like, I don't know who would make those markets. It's just like a whole pain in the ass. Like, how would you even hedge your balance and exploit through prediction markets? It's very difficult to do. Versus, like, I think something like that actually is, you would have to figure out a way to, like, you would have to figure out a way that only like a percent of, like, let's say you want to allocate, let's say you have a portfolio makeup and 5% of it you want to allocate it into yield generating assets. You would have to put a percent of that 5% into this vault, and then like always earn on it, so that it's never a pain in the ass for you, but I can always get the liquidity I want to hedge. It's a very difficult thing, but long story short, this would have been the kind of a good opportunity for them. Like, if they would have been able to do stuff like this as well, like, everybody would have always betted that balancer was going to be okay, but LPs would have been able to hedge their risk and would have been paid out now. I just remember it being a big thing. I think they died out, but it was a cool protocol. I wonder if it comes back.
Yeah, I mean, maybe one of the difficult things about this market too, you have a lot of on-chain participants who are willing to like basically be underpaid for the risk they take. So like we see capital like shove into vaults for, 10% yield on like a new thing. And I think we understand that like maybe they're not really like accurately always pricing the risk on that opportunity, and maybe 10% like way underpays them for what they're actually doing. So it probably doesn't help this dynamic where like it might be hard to kind of fill that, like when you have so many participants who are like sort of willing to take on risk at lower cost, it might be hard to have like a broader business of like, selling insurance to protocols when they have users who are willing to just like take a gamble and lose money if something bad happens. Because what I find interesting is like we have had a lot of big hacks historically, but like, you give it a month and then people are like, well, I found the newest 20% yield opportunity, time to put my life savings in there.
Yeah.
and we run it back inevitably. So it's like
also
almost like the market's not really like incentivized to even seek that out.
This is something interesting River always says. Shout out River. Like every once in a while there'll be like a new the same opportunity that you talked about, which is like 20-25% yield on some new exotic form of like yield farming or leverage or whatever financial engineering some guy in France has cooked up. And River's argument always like, I can just get that by looping PTs or YTs. So why the fuck would I ever do this? And like I think that like 25% is, it's like at a very awkward stage, right? Like of yield. It's not quite high enough that it's like ohm level where it's like you put a little bit of money in and you're like, what if it just like keeps going up forever? And it's like not safe enough that you're like, yeah, I can allocate significantly into at least for me. I know there's people who are like, oh, like 20%, yeah, I'm putting $1 billion into this bad boy. But for me, it just never made any sense. I don't know. Like you can probably make that on like buying a token, and you can make multiples of that just by being exposed to tokens. So what's the point of like?
Yeah, I almost think the alpha here is in like kind of being faster to these things than the rest of the market. Like there are definitely people who are making a living moving their capital around into these different pools like early on in their lifespan when the yield isn't diluted by everyone who jumps in and sees 30% on a brand new stable farm or what have you. But no, if you get in early and you capture some bips on your stack and then go to the next one, like I think people are definitely doing this to some consistency and earning on it, and not like remaining exposed with a large portion of their funds and just like sitting in these different types of products. Because I think that's how you end up in like, oh yeah, I'm just gonna chill in this like usual USD 0++ pool, and then when the bond inevitably depegs because it's not a stable coin, then I get fucked. So
yeah.
There's definitely like it's interesting. There's almost like a rotational like narrative thing on the yield side as well as like on the kind of meme token narrative side too. Because I think a similar sort of strategy is like I see this a little bit from like smaller accounts that do like liquidity pool strategies for like hot token pairs. So like, buy into tokens and then like LP them to earn the yield on the trading volume, but like kind of selectively sell, like kind of strategically sell out of them as like the hype and the narrative kind of dies down. And it's sort of like a way to profit on them without having like pure exposure to like a meme coin, for example.
Yeah.
But I think like doing those types of strategies, it's far more involved and takes more, understanding of what you're actually doing than just like, oh yeah, I'm gonna put my portfolio in this 12%, APY stablecoin farm just because it's free money. Like come on, it's not free money.
No, it doesn't. Yeah, I know what you mean. Those were like pretty popular during the meme coin thing, where like you accidentally ended up with too much of the supply of a token and it went up to our money. We were just like, yeah, fuck it out. I guess I'll try to use the radium front for like 3 hours. fucking create a liquidity pool. Yeah, I think that's a good place to end it, Danny. Do we have another word?
Before we do anything else, I want to give one last shout out to our sponsor, Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL. In just 2 months, Katana has surpassed 500 million in TVL, with over 90% of that TVL being productive in ecosystem apps like Sushi and Morpho. From now to the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added VaultBridge yield, and other chain revenue. Follow the link in today's show notes to get started. Thank you to Katana. Halloween themes, kind of late. We should have done that on Friday.
Yeah, I didn't realize
with our friend from Kyo.
If only I had a good producer to help me out with stuff. But
They've got some fun little like spooky backgrounds. Say something funny, Bach. Anything funny.
But how did you do that? Can you put it up again? He knows what I've done.
Like this?
Not that. No, he had a rolling banner. How did he do it?
Oh, what was the banner?
All right. Guys, thank you so much for listening to us chat for an hour. Make sure to check out everything in the show notes. Make sure to subscribe to 0x Research newsletter. And we'll see you on Friday at 11 a.m. Eastern. We're going to be chatting with the CMT Digital guys, Aryan and Matt. I think we're going to do a bit more of a serious conversation. Although they did send some stuff over that was very, very research heavy. And this really means that I have to actually study up Wednesday, Thursday to get enough knowledge for the conversation. But I'm pumped.
I think it's going to be a good conversation when you ask, do you guys have anything you want to talk about? And then they list 15 things in one message. It's like, okay, I think there's plenty to talk about. So yeah, it should be, Friday should be good.
You know, I said there's like Dan Smith's really into Legos and trains. Like he's really, like Matt and Aryan are really into making money and research the way that people are really into Legos and trains. Okay.
Yeah, these guys love DeFi.
Perfect. All right.
Awesome.
Peace.
Chat, we'll see you Friday.